Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. So down day after a big move from last Wednesday into Friday's close on the jobs data. I think the Dow was up 276 on Friday, so the lows today was down 100. So if you look at the chart, it doesn't look like it's so out of whack, so to speak, where this couldn't have happened. I don't think anyone was expecting for us to have a full-fledged breakout today, but what you thought maybe a quiet inside day, ahead of potentially a breakout a little bit later this week. Not saying that's off the table, but today definitely went back into this, all right, what's next mode. You look at the chart of the SPX and you'll see, we've been in this choppy range for most of this year, but we keep holding where the market has to, whether it was here in January or whether it was in this spot in March and then was last week right here, when we were on our lows and then went right back to highs. So this inside day, doesn't seem like the end of the world. Everyone's saying, but, we can't break out above this. That means we're going to fail. I don't know if it means we're going to fail. I just, at this point, the question is, do we, pull back and does this range go for friggin' another month, building this channel, or do we hold higher and, break out a little bit more sooner than later? At this point, inside day, not the end of the world, okay? Anyone who uses like their little Fibonacci's or whatnot, to go from where we were on, Friday's low, or not Friday's low, I'm sorry, last week's low to the high here. We're still at the 25% retracement. That's all it is. All we did is retrace 25% of the move from whatever that date is, May 6th low to Friday's high. And that's where we are. You could even pull into the 0.382% and be deemed very strong just versus that. And sometimes the way this market's been, it goes even half. So what you don't want to do is you don't want to get in too big too early where you can't hold. Because once you do that, then you start getting spun around. And as far as the spiders are concerned, this range still intact. We talked about how to adjust around pivots. And right here, we couldn't break above. And right now it closed into this gap. So what does that mean? It means that at this point it looks like it wasn't strong enough to hold so tight up here for a quicker move to the upside, but you don't know, and so if you're risk averse, you don't know how much of this gap we fill, and we could probably fill the whole thing almost, so why not have a little risk down, I guess, or have a hedge, or not have as many positions to see what happens. So we'll see what happens tomorrow. One of the main reasons for the weakness was obviously bonds, okay? And I've been writing about this, and people have been thanking me about how keeping them safe and this and that. And I should be I should have a computer algo based around what I write in my note, because this was sell signal 1. Came out that day, posted the chart on Twitter saying get out of at least some of your momentum TLTs. And then we talked about what to do in the intermediate basis with the TLTs, which was right here. Said if we break this, you could probably get short or at least get out if you've been enjoying what has been a tremendous run, right? Why sit through and give back more than you have to? Remember this outside day here took a lot of time to repair before going again. Then from here, you had that boom, down day, okay? That intermediate trend broke, okay? So why not, get rid of some of your TLTs or even get short, guys who obviously make money short. So from here, first move was down to the 200-day, right? So bam, that was the next spot to kind of judge. And then from there, it didn't even hold, went below it, okay, before getting really oversold, because from 129 down to 120, you would think you'd have a bounce retest, and then did a bounce retest on Fed Day, right? Oh, that was here, I'm sorry, from there. And then failed. And then from there, now you have a new low. So obviously, the rule is if you break below the 200-day and you don't want to reclaim it in 2 to 4 or 5 sessions, it's not a sell trap. It's really that weak. So hopefully you're not trapped in this, giving back all the money you made, and maybe if you're trading it well, it looks like technically it's doing a good job, right? Sell signal 1, you then broke here, retested another sell signal, came here, bounced off of it, failed there, and now new lows. And now it's below the 200-day. And my rule is, if you trade for momentum, if something's below the 8 and 21-day, you do not hold that as a swing trade. You get out of the way, And if something breaks the 200-day and then can't get back above that, chances are it's really under pressure, and institutions might be unloading, and for the TLTs, that means, the market thinks rates are going higher, before obviously the Fed is doing it themselves. So, you would think the banks could hold up well, and all in all, I would say the banks tried to, but it came under a little pressure. It's still fine. Look at this 2-day move. It's still above the gap, so this is not in the gap showing relative strength. So the banks are a source of relative strength, which makes sense. Rates go up. Banks are supposed to make more money on deposits. Goldman Sachs didn't pull in. All right, Morgan Stanley, I was in since Friday. Came in a little bit, but still acts very well. I'm still in Morgan, and I'm still in Citigroup. Citigroup, not as good, but hasn't been that strong anyway. But still has a nice setup where at some point, if the market got a little bit better, you would think that this could continue to the upside there. Then I came in today thinking maybe there's some momentum trades, and we had 2 really good ones. Netflix happened real quick. I was in it overnight, and then you didn't even have to be. It was only up $1 or 2, and then boom, took off. Nice 3-day trade. I am not long it anymore, but this was a nice momentum move. That hasn't happened in a while. I let the 8-day catch up. Tesla wasn't as strong, but it gave you a decent move off the bat, where if you were prepared, it went through this, Friday's high, which was, 238.40, and then went as high as 242.88, but then with the market pressure, it just wasn't that strong or ready to continue, but I still think technically this is a good setup. It's been acting very well since here. Actually, at this point, it's not a great setup because it's not as compact, but if you're trailing some, that's fine. It's come a long way from when it was down $10 after earnings and they saved it. So, you could be a little cautious. I was a little cautious on both. I took the trade in Tesla and Netflix, but I always take them early. Apple got me a little bit overnight. Still, the jury is, I guess, somewhat out on it as far as what's it going to do next. It failed after, earnings when it couldn't hold 133, and basically, is trying to rebuild. I got stopped out early, and then I got back in a little bit. It showed a little relative strength intraday, but really nothing so special. So I'm in some overnight and just trying to hold in here. I guess we'll see what happens. This is your point of reference here. Well, you don't know what the morning gap's going to be like, but it's still contained. So if you're trying to draw this small descending channel within this overall range, it's still trapped. So you don't need to be too big here in Apple. If you're a macro holder of Apple, I'm sure it's going to be just fine for you. But let's see what the weekly chart looks like, depending on where. From this breakout, let's see the weekly chart. Yeah, the weekly it could even, that's why the weekly chart could even come back in and test 120 if it wanted to, if the market got weaker. But we'll see, and I guess we'll know what the market really wants to do, because like this morning, it still has room to there and still has room to where it broke out. This morning I was like, I don't think we're going to be able to be that strong with weakness in Apple and then also weakness in the XLE. They were really weak. So this came back to the 200-day and failed. I want to show you a candle here that could have helped you. Look at this outside day here. This is an outside day, right? Made a new high, engulfed 3 sessions, closed on the lows. That is your sell signal. This was, a strong day here, engulfed an area and then held halfway and then gave you some decent trades thereafter. And then on this bar, not only did it have an outside engulfing bar, but also you lost your 8-day. So it was following the 8-day the majority of this time. So this is a small change. If you make adjustments and small changes, you're out of the way, or maybe even here. Okay, and then now today closed real weak, a lower high, and to me, I don't know what's next here. All I know is that you had a reflex move back to the 200-day where it failed. It didn't reclaim it, and now I guess you'll see, does it pull into here, and will it hold there? That's all I guess you could know. On the oil, on Wednesday, I pretty much said I think there's a 65% chance the high is in for May, and that was on this day right here. Same way I said the 65% the low is here. Here it wound up being a decent sell, and then maybe even short to fill that gap, and now it's struggling. If the USOs can't get back really above here, then this little direction could mean that you're going to get a little bit more downside. So here's your ascending channel from the lows. So a move below this, and all of a sudden, it's not as compact anymore. The momentum's not as strong, where you have low, higher low, another higher low. So is this another higher low with a small red dog reversal? I'm not so sure, especially when you see the XLEs so heavy today. But we'll see what's next there, and if that continues to break down, then perhaps the market's going to have a hard time breaking out. You can even draw this trend like this. So besides the outside day, besides losing the 8-day, you lost the trend from the lows. So if you're trading in intermediate and active trends, that's your exit sign. Social came in long a little bit. They're not really giving you a true sign that they could be held. Here was your earnings outside day on Facebook, your spot to get out of Dodge. Lost the 8-day right into the 21-day, and then it's trying to hold, but it's just turned down again. Yes, it's still above here, so if you're trading versus this, you could sit in it. But at this point, it's not, for an active trader, it's not giving you any true reason to over-focus on it. And as an intermediate trend follower, from this gap, sort of, I guess, broke trend here. I think we talked about it last week around 79. So with that said, you can't rule out that it's not going to come into at least here or to this 200-day or another trend line around 78.582. So when a stock's kind of flapping in the wind, which is what Facebook's doing right now, you don't need to be overly involved. Okay, in this outside day, at least it happened after earnings, so it wasn't halted. You didn't get trapped. You had a decision to make on this daily candlestick there. Twitter. Twitter is just drifting around. Got a little life when Yelp news came out, but didn't really have much follow through. I was in it for a trade, and I'm like, I'm not just going to sit in this. I'm going to wait. So we'll see what happens here. It's still, intact versus the lows. You still have a lower pivot here, but I'm not so sure it's just going to break to the upside, even though it's coming a lot. So I'm going to wait and see. This PTBI, I'm kind of frustrated if I'm reaching like this. The stock has come in. Oh wow, I didn't even realize, how expensive this was way back when. It started to get on everyone's radar right here. Okay, let me just put some volume in, so you could see what happened there with the volume. Basic studies, volume. Big volume bar, gapped up the next day, failed, held, and now closing the dead highs with some volume. I'm long some. It's really not what I do, and unfortunately, I guess I've been seeing a lot of people make money in a lot of these big volume plays, and I guess I tried a little bit today, and I'll see what happens here if we get some follow through, and then tomorrow, because a lot of the momentum players, the stock closes on the dead highs with volume. You buy it and take it home, and you get some kind of follow through. It's been here now for 4 days. BlackBerry, obviously, but much different, a dinosaur of a stock. It had a big wide range bar. We caught this one early, actually. Look at the size of the volume here. Look at how big this was. Lately, you get no follow-through, and I don't know exactly what the rumor was. People saying Apple and BlackBerry. I find that highly unlikely. But ultimately, nice wide-range bar, day one, engulfing this whole area on volume. It's been in a channel for a long time, so I'm in some of that. Usually, it doesn't last, so we'll see. There's still some room to the upper end of the range, I guess. It still has a channel, still has a big short interest, so to me it's worth a try. Look at the volume there again, but you haven't had much follow through. We'll see. And it's Monday. Today's action I don't think was so bearish, but definitely some reasons to be skeptical that a breakout above 21.25 could happen. With bonds getting really beat up and that saying, okay, smart money's getting out. Some think it should come into equities. Some think it's a precursor of equities lower. I'm not going to try and be so smart. I'm going to try and watch the action and watch the levels. We had a big move like I showed you in, the spiders from here to the upper end of the range. We really did not come in so much today. And if you look at the volume, this was not a lot of volume. But we could test these moving averages again, which comes in around 209.80. So if they want to shake the envelope a little bit, you could still get another, point lower and fill the gap, and then turn up and then go sideways and then see what's next. So, this little failure here should have got you to reduce a little bit of risk, but doesn't mean you take it all off, because the misdirections lately are the ones that tend to be the fastest. So we'll see what you get tomorrow. So it is what it is. I hate being at the high of my P&L by 942, but it feels like if I would go and say the majority of this year, I've been at the highs of my P&L by 942, and you try and stay with trades, you try and find second and third moves, they've been hard to find. Typically, the fastest moves are a trap move, whether you close on the dead lows, gap up the next day, and then people have to figure out whether they could short more and get out of it, or cover and then try and get long, or the vice versa. That's been the theme of this year. And maybe if it changes, it'll be different. But until then, take trades and keep your risk a little bit down and figure out what's next. I'll see you tomorrow morning with Brittany. Have a good night.